GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Hope you're all doing well. Hope the week of trading has got off to a good start so far. Of course, we're going to cover some of the major asset classes. So we're focusing on Forex. We've got the euro, the pound, the yen, the Aussie dollar, and then we have some commodities. We have gold and oil, and of course we're going to look at the stock market, but we're also looking today at the cryptocurrency market through Bitcoin. Right, so without further ado, let me start with the currency market. So here's our euro-dollar currency pair. This is the 4-hour trading chart. It's looked pretty similar for a while now. You can see that the volatility has dropped, and so we've basically been dealing with a rather contained range, and so basically 108 to 109. It's been a 100 pip trading range with probes below 108 and sort of multiple failures just beneath 109. The difference being, as of yesterday, is that we've had a breakthrough through the top side of 109. So this is actually, to me, an interesting development. We've actually touched the top side of over. We've reached an overbought level for the first time in a while, whereas of course they weren't overbought on these two previous peaks while we're still in this little trading rate, 100 pip trading range. And obviously we've had a big move up to the upside, but ultimately we're still inside this 108 to 110 trading range. And while it seems like a bit of upside momentum has been injected into the euro, I'm still a little bit reluctant to start trying to trade this like it's a trend, because I don't think it is. What we can look for is basically this as our kind of zone of short-term resistance that had been capping this price area through here. If we get a pullback into one of these highs, something like down here, which if I use the crosshairs we can see is about 108.80, something into that 108.80 zone, then obviously that's the prior resistance. Should we get some sort of confirmation that actually the trend is accelerating to the top side, then obviously that would be an opportunity to ride this bit of momentum. Otherwise, I suspect we push further into overbought territory and we find ourselves back at the top of the range again, and that would be the more clear-cut opportunity to sell back into the range. Now maybe this range is ready to break. It's been here for a while. We've held the bottom side a few times. I did say last week that we're, when we were looking to buy down here, maybe this was the 5th time lucky and we would break to the downside. It hasn't happened yet. We're still inside the range. We're pushing to the top side, and so there we have it. I mean, it's as we're riding higher, the chance of an upside break maybe increases, but nonetheless we're still inside the range. So really the pullbacks to this short-term resistance for a move up to the top of the range, or just waiting for that top of the range move for a lower risk opportunity. Let's move over to the British pound. So here you can see in the pound that we actually did break through the bottom of that trading range, and so 123 was the kind of big round number involved. We've actually got down as far as 122, 121 even, but we've seen a bit of a rebound off 122, and actually something that's a little bit more bullish than the euro is actually that we've had kind of a downtrend in momentum for a while here, and this is quite a distinct trend line break in momentum, which can often foresee a move, equivalent kind of move in a price. So if we get a fallback in momentum, a fallback into price down to the prior low, down towards 121 again, this is just one indication, not that the price is about to zoom off from here, but in the next pullback that we actually don't take out the low. This is one indication that that might be the case, because it seems to be we're crossing over from bearish momentum to bullish, And and the other thing you could point to is the fact that it Meiji was a marginally lower low on the RSI, but it was essentially an equal low. Ooh, doesn't want to move for me. There we go. You can see we made a marginally lower low, but look, compared to the price, it was a substantially lower low. So almost some bullish divergence here. And short term, if you go look on a 1 hour chart, you can see that we've actually broken this declining trend line too. So a bit of a kind of positive shift in the short term momentum. We don't know if the long term trend has changed just yet. But what we could be looking at is, it depends which level of these you want. This line here we're already back through. I was putting more weight on that prior line. So if we got a move back through this definition of, say this was the trading range, we broke lower, but then this whole situation here ended up being a false break through that line. We got back above the line. For me, that would be a positive indication that we're actually going to be trading substantially higher again in sterling. So question we're asking, is this a false break lower? Opportunities are to the downside for the moment. We're still generally in this downward drift. We're below the moving average. We've come back up to former support, which has now acted as resistance once before. So there's an opportunity that the price drops back from here. But slightly bigger picture, it looks like potentially things are shifting to the more positive side. So maybe even some kind of action like down and up again. Okay, let's look at the yen. So we mentioned this downward trend line break last week, and we indeed said that we didn't want to be buying up at the peak, but we wanted to buy at 107, the moving average or the trend line, and actually they all worked perfectly. 107 did not work perfectly, depending on your stop level, but we have indeed pulled back to this rising trend line, and to me this looks decent. It looks like everything you would want in terms of a downtrend line break and a push to the top side. Of course, nothing is guaranteed by any imagination, by any stretch of the imagination in currency trading, but it looks to me like probably we're basically coming out to the other side of this. We basically pulled back into a kind of range here. This is almost like a cup and handle formation, and we're just trying to kind of get ourselves above this level here to make some consistent move to the top side. Obviously a move back to 107, well, you just get another opportunity to, this was the original pullback, buying at 107, there's the trend line. Well, it looks different on a 1 hour chart, but here you can see that we basically held, after that first false break, we kind of held those lows. Who knows, maybe we get a deeper correction, but the general idea is that these lows hold. So maybe we get a deeper correction back to here, maybe we just rally up from here. So that's obviously a question of when to enter the trade, but the general idea is it looks like we're pushing to the top side based on that trend line break. That's the idea I have on the market right now. Well, this is actually a daily chart for the Aussie dollar, and I just wanted to start with that because, okay, so this is not strictly speaking a bullish engulfing pattern, because they are supposed to happen at the end of a trend, and clearly this is not the end of a trend, and clearly one just happened right there, but there is some evidence that, okay, reversal off the low here, bullish engulfing off the low here, another bullish engulfing follow. There's various signs of buying going on at 64 to me, and so we were asking the question last week whether this is potentially setting up to be a double top. I said it doesn't really look like a double top, that it looks more like a horizontal trading range. This doesn't really look like a classic topping pattern to me, and that's sort of bearing some fruit at the moment. I think we're pushing up into this resistance, There are clearly some opportunities to sell in the short term as we bump into that resistance, but to my mind, the trend is up, and it doesn't look like reversing yet. It looks like it's continuing. So we're looking for a break above these peaks, which come at 65.60, and continue up to 67, and then we've got that prior peak up here just shy of 67. And these these big lows through here and everything, so that's quite a big level up at 67, and that might cause some bigger correction, but it doesn't look like these levels here are quite ready to call a top in the market yet. And so what you'll see in a minute when I cover the stock market is that, and also gold to a lesser degree, but also oil, is there's basically a more risk-on tone in the market at the moment. And it was something I said that last week, that even though there's a lot of bad news out there, and actually last week turned out to be one of the worst weeks we've had in a while. I think the worst week in 11 weeks for the S&P 500. Still, as of this week, we're almost reversing all those gains from all those losses from last week, because actually the market isn't really showing. Even last week, which was bad, we're not getting any follow through this week, because actually the general tone is that we just don't know enough yet to get super bearish. We don't know if there's going to, how can you possibly tell if there's going to be a second wave of the virus? It's impossible to tell. But what we do know for a fact is that economies are reopening, and we do know for a fact that governments are piling in all sorts of support. So those two things probably outweigh the uncertainty for the time being. Okay, so that's the Aussie covered. Let's look at gold. And so we called this pretty well last week. We talked about this triangle pattern, and we didn't get a nice clean break in the end. We hit 1770. Did we get 1770? No, we came just shy of 1770, and we saw a bit of a snapback yesterday. So we broke higher in the morning and turned a bit lower as of the afternoon, when stock markets really kind of picked up steam. To me, I'm certainly not trying to call a top in this market anytime soon. It looks positive to me. Got a decent pull. I mean, that was quite a large pullback, so I'd probably expect a bit more downside from there. Who knows? Maybe we retest 1700. Obviously, this broken trend line is one area to look for. If we get another little leg down, then maybe we can rally off there. Yes, as I say, like, a bit of a bigger drop than you'd want to see in a very clear-cut bullish market. But to me, this overall trend is still positive, and looking for pullbacks to areas of interest, and for signs of strength off those areas of interest. One thing I hadn't adjusted here is this. So that's quite interesting. There has been a modest break through a rising trend line in the RSI. Yeah, so probably supportive of the idea that we've got another little leg lower after that quite sharp drop, but not clear how far that takes us, and certainly not clear that there's any kind of bigger downtrend to happen here. Maybe we even go below this trend line and we just come back, and it's more like a softer range, that we get a little dip below 1700 and push up again, something like that. So this rally petered out a little bit quicker than I would have liked, but maybe that gives us an opportunity to buy in at lower prices. Still expecting 1800 in the not too distant future. Right, WTI crude. I mean, we've basically said that it's a sort of bigger trajectory. The market was looking very soft, but we've had such a strong rally off the low that obviously we've just been going with that kind of momentum off the lows, and you could see that we hit oversold several times, and now we're rallying off. No one quite. This was a funny one, because we had all the experts telling mom and pop retail traders like us that we were wrong to try and buy oil at such low levels, but actually it's proved to be a very decent trade. After oil prices hit negative, it was obvious that that was just a completely unrealistic price, probably wasn't going to happen again, and so it's a historic opportunity to buy oil at low prices. Now we've had a massive run up, obviously, so we've gone from 10 to above 30, so what's that, 200%? So obviously there is a pretty decent chance for a pullback. We've run into this previous peak now, but 30 is the big level in WTI, which we're above. So I think it's short term we're looking for 30 to hold for extra strength, but after a massive run up you could be tempted to go counter trend and use this area of resistance. I wouldn't rely on this particular line where we currently stand on working amazingly well, but you could work on the basis that we don't quite make it to 35 and roll over, and that could be the basis for a trade, that we don't quite get to 35 and we have a bigger pullback, perhaps towards 25 again, maybe. So some counter trade opportunities, always very difficult to kind of pick a top, so you've got to kind of allow some extra leeway in the way you position and take risk on the trade. Clearly this short-term momentum is up, and depending on how, say if you're assuming this is a pennant pattern, we've either pretty much run the course with this. I know, I suppose actually it could take us to 35. Yeah, that's interesting. Up to 35, or what we're actually thinking about is more like this, and then we're projecting much higher levels, then we're up above 40. Ultimately that seems reasonable, but whether we can do that without getting below 25 first, we'll have to see. It looks like a bullish market. I mean, that was also a kind of decent bullish basis for a trade, is that we basically hold the lows of this latest consolidation at 25 and look for the market to push up to 40 before we get below 25. Both of those seem sort of counter trend and trend scenarios seem reasonable to me. Right, let's have a look at Bitcoin now. This was the channel, if you remember, that I had on in last week's webinar, and basically we'd had that sell-off just prior to the halving, and I just said that, hey guys, don't worry too much. Looks like we're still in this bullish channel, and we're above this moving, the 20-day moving average, so it looks all right for now. And so that's, and actually we did get a rally. We'd already held the channel low, and we continued to push higher. We're basically back just shy of the 10,000 level again. And obviously the market's a little bit tentative ahead of this big level, and it has been in the past as well. This is our daily chart, and this is kind of how I'm picturing it. Is that it was basically quite a well-defined bottom of the channel down here. This is through this peak. And you can sort of see, I mean, depending on how you want to draw, I mean, you could do it through that very highest price. And you could basically say that this section was like trying to break out. We'd already rallied off the bottom of the channel. It was already a downsloping channel. We tried to break out, but no, that's, we hadn't really bottomed enough first, and we really slammed down. But the channel worked again, and now we've pushed all the way out of the channel. We've pulled back. We've held onto the 8500. We've held onto this new rising channel. You can see about on the 4-hour chart, and so maybe second time lucky for actually kind of breaking this downward channel correction on this kind of daily chart basis, and actually maybe shifting, maybe this move by itself doesn't completely sustain, but we pull back, but we pull back to well ahead of this low down here. Instead of making lower lows like we had before, maybe we get to a point where we sell off, but we hold on to, say, 6,000 or 6,500 or even 7,500 on the next leg lower, and then we're starting a new push to the top side. So anyway, so we could just go straight through 10,000. Obviously, for me, I'll be watching this 10,000 level as a another potential selling opportunity. But equally, given that we've already sold off here from once, twice, 3 times, you could say at the moment we're attempting our fourth. Maybe got one more. That, you know, who knows how many times it actually takes. But it does seem like we're kind of gradually trying to take out the sellers at 10,000 for an eventual break to the top side. And there's our short-term channel again. So clues that 10,000's worked again. Look for the break of the 4-hour channel. That tells us maybe we're getting our move to 7,500 or lower if the channel breaks. And then we're looking for these lower prices down here for this kind of general idea to hold that we're out of this downward channel. We're doing something new now, something more bullish. Now, last but not least is the S&P 500. Here's our daily chart. And obviously, what everyone's sort of been, the natural thing that everyone thinks is, okay, big crash, snap back, oh, and then we're just gonna immediately, you know, and then this can't last. Come on, guys, how are we rallying? We've got to crash back down to the low again. There's been a lot of people sell into this rally, sell, and even here, sell, ready for this. And obviously, that will be a great move lower and a great move to capture if and when it happens, but the markets tend to do the opposite of what you want.